Welcome to this week's edition of Trade the Trend. I'm Jason McIntosh. It is Friday the 8th of October 2021. Trade the Trend is a weekly video discussing the latest trends and opportunities in the market. And as always, this is general advice and it's not specifically tailored to you. Alright, well with that said, let's kick into the first chart. The S&P 500, well geez, what a week it's been. It's been a real seesawing battle. So let's start by putting our supports in that we've been watching over the last few weeks. So it's been such a fascinating area. So here we are, just coming in here, just move that up a touch. So there we go. So that support's coming in at 42.50 to 42.20, and well, we got down there this week, and it marks about a 7% pullback in the market. So look, it's interesting to look at the daily chart, but I think for this section that we want to see in here from last week, it's going to be useful to look at it on an hourly basis, because these bars are all well and good, but you want to see what's going on within that bar. It tells you a lot more when you look at the hourlies. So let's jump over to that now. And well look, here we go. This tells us a lot. It's been a real battle between two views this week. You've had the bulls who have been trying to buy the dip the whole way through the week, and the bears looking to try and break this market down. And you can see the tussle that's gone on by the strength of the rallies and then the sharpness of the declines. And it's happened on several occasions, ultimately leading into the breakout to the top side this week. And I think what was telling is that each of these declines, well, they all failed to break the previous low. So that was a sign that the bears were just losing a little bit of energy each time. They couldn't break the line. And what often happens when you get that sort of set up is you ultimately get a snapback in the opposite direction as the losing side, in this part of the battle at least, concedes defeat and starts to cover their position. In this case, it was the bears covering their shorts, which led to this strong move on Thursday in the US. So look, I think the immediate downside risk has now passed, and so look, what happens from here is, like, I think the rally off these lows we've seen over the last day, I think that removes a lot of the immediate vulnerability, and it would take an unusually large turnaround to really re-engage the bear case at this point. So like right here and now. So look, over the next few days, it's really hard to imagine that this market could now reverse, fall, and break this support. So let's jump back to the daily chart to continue this discussion. So what we have here is, I think that the I think we've got to look at the bullish case now. And look, one scenario is that it's all over, that this marks the end of the decline. And if you're to take that stance, it's quite possible that we're going to see something like this develop over the next few weeks. We could get up here, retest, some sort of a retest up near the highs, a pullback, and then a punch through. That's a bullish case. And I think we've got to give the bulls the benefit of the doubt, because the medium-term trend, we look at this, the medium-term trend is still up. There's nothing to say that this should be a significant and lasting top and that we've started a big bear market decline. I think our base case has to be, and it always has been, that this should be a pullback within this broader bullish trend. So that's why we've got to give the benefit of the doubt that the bulls can turn this around and keep this running. And I think if you've got a medium-term approach to the market with the way you position your portfolios, you've got your exit stops in there, I think this pullback so far, well, it shouldn't have caused too much damage to a portfolio with appropriate exit stops. The exit stops should have been well and truly enough to sort of see this off. So giving the bulls the benefit of the doubt is I think it's probably a pretty straightforward thing to do. Now, look, having said that, it's Having said that, I think that, look, my feeling is that this still isn't over, that there's definitely the potential that more downside is possible over maybe the next month or two. And want to look at a couple of examples. So if we just compress this chart up a little bit. So where are we? It's so look, there's a couple of examples in here. So, well, firstly, before I do this, just notice the profile of the decline. It's a zigzag. It's sort of like it's your classic zigzag decline. You've got the one, you've got an A, a B, and a C. You can see how the market zigzags lower. Very common that a correction or a pullback in the market takes that shape. So another example, I've just got to find it with my eye again. There it is. Easy to get lost in with all this data on charts. So here's another zigzag down just here. So same sort of profile. You can see the same zigzag profile as we've got there. And this one was a bullish example, how we got the zigzag down and then we got the reaction up and off to new highs. That's one scenario. The other scenario, which I'm open-minded as to, look, this is sort of the be cautious. The be cautious camp is this sort of zigzag here. So that didn't finish the decline. That was just probably only really, this was really halfway of a broader pullback. And now just to give some idea of like what could happen. Now this isn't a prediction by any stretch because these things never play out the same way. It's what we see here, we almost certainly aren't going to see over here. But just for interest, just to sort of like show you how a move like this could potentially develop, and just trace that out. I'm going to now just put it up here. So this is the sort of thing which is possible, which we do need to be aware of as an alternate scenario to the bulls are back in control and we're going to new highs. It's these upward moves, these sharp upward moves you get during corrective periods. Like you can see through there, it's a really sharp rise. We're starting to see that, and it could continue over the next few days, next week. Could get another one like that. And it really causes confusion as to what's actually going on, and then you can get this big downdraft after that. If something like that were to happen, it still fits into the scenario we've been discussing over the last few weeks, because that would give that'd be around a 13% decline. My view the whole way through is that this is somewhere between 5 and 15% in terms of the sort of pullback we're going to potentially see. I think we've met the minimum case already, so it's possible that we're up and away from here. But it's also possible that it could extend out over the next month or two, and that these larger downside targets are possible. So I think that, look, I think we need to give the longer term trend benefit of the doubt, but I think it also makes sense to approach this market with a bit of caution. So for me, that means no leverage, exiting your stragglers, and waiting for the right opportunities, watching your exit stops, and if the market goes up, that's great. If it doesn't, well, we've got a plan for that as well. So we're not going to be blindsided should something like that take shape. Okay, so look, let's jump over and have a look at the Nasdaq. So it's similar sort of story really to the S&P. So let's start with our support area. It's where would that? Yeah, it's around there. That's around about sort of the marks we've been looking at. So support on the Nasdaq comes in. It's around that 14,240 to 14,140 sort of region, and it's we can also draw the Fibonacci levels on this latest move. So we're using this as our start point for the latest advance up to there. So you can see that, expand it out a touch, we came right back to the 50% retracement, which was right on the support zone. It's a really, what we're seeing now, look, the market's come back by 8% from the high. It's what we're seeing now, the rebound. It's a really natural place for a rebound to happen. So the question now is, how strong will the follow-through buying be? And how far are bulls going to be able to push this market up? Are they going to really be able to re-engage that medium-term trend? Or is it going to be more of a case that we do have some sort of a rebound up to here, but then we start to fail again later on in the next over the next month or two? Time will tell. So again, it's a case of benefit of the doubt goes to the upside because the support has remained intact, but we're always got to be vigilant and open-minded that look, maybe something else starts to take shape over the next little bit. But look, for now, I think the immediate vulnerability is past, but I still don't rule out a test of this 200-day moving average, or even potentially lower, into the weeks ahead. So local market time over to the All Ordinaries. And look, like the S&P 500, it's been a real battle line week in what we've seen going through during this period, this section through here. And it's been a case of the market's been repeatedly testing this key support zone between 74.80 and 74.20. So let's just draw that on the chart here. It would be probably a touch higher here. Yeah, it's around about this sort of mark. So yeah, so 74.80 to 74.20. So we got down to about 6%, a 6% decline. And my feeling last week is that we probably were going to punch through this support and come down here and test the 200-day moving average. But look, that wasn't to be the case. So look, it's about watching the price action and just always assessing and looking for clues as to what could be happening, what could be changing. So let's go over to the hourly chart again, because it'll just give us some more detail on this section. And look, like the S&P, really interesting how we've seen these strong rallies off the support region. And so last week, this is where we were talking last Friday afternoon, and I said something along the lines of that I thought the market might need a bit of a run up before breaking through. And I said by a run up, I meant that just something where it just went sideways maybe for a couple of days and then punched lower. That's the sort of price action I was looking at. But look, it was we got something quite different. We got this really strong rally off the support. We got another rally there, and then by yesterday, this is where we started yesterday. We got another strong rally there. So that really made me start to think that maybe the bears were losing their energy to really punch this through. And my short position, or not my short, but my hedge position, which I've had over the last couple of weeks, I decided to cover. I covered my hedge. It was just in here yesterday. And look, I thought long and hard about doing that, because I do have these concerns that, I'm open-minded that could turn into something larger. But look, it was a case of really looking at my past experience of sometimes staying short or hedged too long, and having the market, then quickly rebound and take the money out of that hedge position. So that's why I decided to cover that hedge. May well hedge again if we get up here and the market starts to look wobbly again, but for now it looks like with that immediate danger past, it seemed to be the natural place to cover the hedge. And now it's a case of saying, let's just sit back and see where the bulls can take it. It's just coming back to the hourly chart. The next real test, I think, will be there's going to be a resistance band which comes in somewhere around somewhere around there. So that's around 7,700, 7,730. And look, we want to see what happens there. If the market's stalling around there, maybe it's a point where I'd think to re-hedge. But if it can punch through there, well, again, it's just give the bulls the benefit of the doubt, see where this takes us. It's look, my experience I remember being back in the dealing room in the early, the mid 1990s, around 98. And there were a couple of really scary parts of the market. There was the collapse of a hedge fund called Long-Term Capital Management. There was the Asian financial crisis, and there was also a Russian debt default. And both all three of those events sent the market into a tailspin. So what I found during that period, I was very good at identifying this part of the market, and I'd get myself short. But then the market on all of those occasions, the market did that. And rather than carrying my shorts and making money and then going along and getting this advance, I would tend to hold my shorts and maybe be put on some extra shorts down here. And so that's why I'm cautious about not trying to stay unnecessarily cautious for longer than need be. So that's why I've covered my hedges, and why I'm now open to the prospect of letting the market see what happens with this rebound. What could it develop into? Mightn't develop into a big new advance to new highs, but it could. So it's being open to that possibility while still being aware that there is still downside risk in this market. So I want to finish up. I'll finish up with looking at I want to look at the uranium market, and then I want to tell you about a stock which I saw this week, which looks interesting. I think it's worth having a quick chat about. So let's start with uranium. If we duck down to uranium here, now this really needs to start holding its supports. So I'm going to put on the Fibonacci levels and just see this pullback. This pullback in, so this is the Sporrit Physical Uranium Trust. It's an ETF which holds uranium. So it's a bit of a proxy for uranium, but it doesn't align with everything that I'm going to show you. So on this one alone, it really does need to sort of start to hold a support and get a rebound, or it does bring this big breakout we had into question. But having said that, then I look at a listing like this one here in the UK called Yellowcake, and again it's a bit of a uranium proxy. It's holding up a lot stronger than the Sporrit Trust is. So this one on its own, this one looks quite a bit better. And now I look down to, this is my holding. This is the way I've played it with a US listed ETF called North Shore Global Uranium Mining. And when I look at this and I put the fibs on it, it's holding up really well. Come back to the 50% retracement. I can see that it's starting to form a bit of a support level through there. So this one here is looking encouraging. Then I look at Cameco, which is the second largest uranium producer globally. It's also holding up well. It's bounced well off the 50-day moving average, and it's looking pretty encouraging. And then I look at a stock, another US listed uranium stock, and this is another interesting one, because what I'm seeing here is your classic zigzag correction, where we go up and then down and finish up there. Now the way these zigzags often resolve is you often end up getting a move like this out of them. They come up, they pull back, and they go up. So that's still my preferred case for the uranium space generally, that we do see something like that. But there is a little bit of, not quite conflict, but I'd like to see more alignment in some of these, price action of some of these stocks. The locally listed stock Paladin, it really needs to start holding its support around here, putting on the fib that's come right back to the 61.8. I really want to see the supports kick in here and a bit of buying come in and start to see this move back up to around into the mid 80s to keep this trade very much in play. And lastly, a look at a stock like Uranium Energy Corp, again listed in the US, and this is a really constructive pullback. This looks like a market which is, where the next move is going to be that. So I think this whole uranium space, I think it's a really strong medium to longer term story. Whether this is the go time now, I'm still really open to the prospect of that being the case. I like the price action in general, but we do want to see that these supports kick in and the price start to rise. So look, an interesting one to continue watching over the next week. Okay, so I'm going to wrap up in a moment. Oh, by the way, look, if you're getting value out of this video, please hit that like button. It's really important because it tells YouTube that you like it and that other people should watch it, so YouTube will then share it out. So please hit that like button if you're getting some value from this. So yeah, just to wrap up, interesting little play I saw this week. It's a locally listed gold stock, and it's called Red 5. It's they're developing I think it's a 2.4 million ounce deposit in WA, and it's, let me just clean this chart up a bit, get a little bit of perspective on it. So yeah, look, as is often the case with these companies, which they find a deposit, then they've got to prove it up, and they've got to develop something. It all takes a while. So you had the initial excitement all up through here as the initial and early stages were happening, and then things often get ahead of themselves, and you go through a period of just back and filling and sideways and just burning up time. And that's very much what the case has been here. Again, this zigzag sort of formation I keep talking about, because it's such a classic sign that you see in so many stocks and indices and commodities. You see it all the time, the zigzag. It's classic. So we've got this zigzag formed, and now let me just expand this out a little bit. Just do some old school technical analysis on it. It's always interesting to see these formations when you look at the chart, and you kind of develop your chart eye over time. Just by looking at lots of charts, you just become second nature to spot these patterns where a lot of people just see a whole bunch of lines. But yeah, it takes a while, but you develop it. And if you do look at charts yourself, you know what I mean. So here are the two look, they're both triangle patterns. They're sideways consolidations. This one has formed the base. We've had the breakout. We've had another little consolidation above the breakout, and now we've had a breakout from that just in the last week. Some good volume going through on this day here as well, so it's a sign that interesting things could be happening. So I sent a signal on this one to my Motion Trader subscription service members this week, and I think, like, look, if you like these more speculative goldy type stocks, this is one of the interesting ones. I think like, from where you'd get in, I think the thing now is working out where. It's all well and good to say, look, this looks good. You've got to work out where's your exit point. So the exit point I've given my Motion Trader members is down here at 19 cents. That's based on an ATR, or a volatility based stock, looking at the stock's volatility and then placing the stock according to a set of calculations. If I was just looking at this by eye and I wanted to be a little bit more aggressive, maybe I'd probably look around maybe around 21.5. Probably just that's a more aggressive stop. So there's different ways you can play stops. You can be aggressive about them. You can be give them more room. The more room you give them, the higher your win rate probably is, because you get the noise of the market doesn't stop you out so often. But the more aggressive you are, you probably write less often, but your average loss is probably lower. So it depends what works for you. Different ways to play it. So look, based on this stop, that would be like that would be around maybe 16% below current prices. This one's more around 27%. But when I look at this stock and look at its potential, I say, look, what potential upside could I get? Could this stock double? Could it double from here? Could it go from 26 up to 52? and I'll look at this overall chart formation, and yeah, I think I could. I think it does have the potential. Not every stock lives up to its potential, but it does have the potential to sort of double in price from here. And then I look at the exit areas, 16% or 27% thereabouts. So let's say on average 20%. So 20% risk for potentially 100% profit. So my risk reward is maybe 5 to 1. If I play that sort of setup all day, every week, month in, month out, I'm probably going to do well over time. So no one knows whether this particular stock's going to play out, but if you play setups like it all the time with those risk reward parameters so nicely in your favour at 5 to 1 or more, it could double again. You just never know. But just as a general yardstick, look, I think you give yourself every chance to do well over time. So, okay, that's a wrap for this week. Let's leave it there. Let's come back next week, re-adjourn, try and put the pieces together for another week. Please hit that like button if you got some value. Good trading and investing this week. Find some trends, and I'll be back next week.